Freya, one of the features of the pickup in activity in China has been the strong supply side response, but the sluggishness we've seen around demand. Are we going to see in the early part of this year a shift in that softness in the services data?
Yeah, I think in the services inflation data, certainly we're expecting a quite a kind of a step change. It's looking very kind of detached in China. The services inflation is looking very detached from the kind of the underlying short-term indicators, even that we have. So your kind of your price indices of the PMIs and even the wage data, such as it is in China. It's not great data, but it is actually showing pointing to an imminent step change in services inflation. So we can expect a strong pickup there. That doesn't tell us much on the global scale because it's kind of different. Obviously, services are much more disjointed on the global scale. But it's a kind of a microcosm of the wider global picture for services, where you do have this huge pile of cash against what is probably a diminished services supply side. You've talked about the supply side economy leading in terms of China's recovery, but the supply side in terms of services and the firms that are able to cater to this demand globally and within China are probably have taken such a great hit, and yet there's going to be this release of pent up demand with those cash balances in the household sector. So we are expecting a big step change in China, and it probably is going to be even bigger in the rest of the world.
Freya, is there any risk to that rebound in domestic demand from this very modest pickup we see in COVID cases in China? It's a little more than 100 new cases that have been reported in Hebei province, but that represents the highest number of new cases we've seen in China since July, and we know that the authorities respond very aggressively and very dramatically to these new cases. Will there be any risk, do you think, to that domestic demand-led recovery?
It looks very small compared to developed markets, but in China, they take things much more seriously at an earlier stage, and that's paid dividends for them previously. So I'm expecting them to crack down quickly. It is the smallest it is a small outbreak. It's the biggest that we've seen, I think, in 5 months. And the restrictions that are already in place in Hebei province, which surrounds Beijing, which is another element of kind of concern for the authorities. The restrictions that we've seen there already have had an impact, possibly on kind of the travel within Beijing, looking at the metro numbers. So with the Lunar New Year coming up, it's almost like a rerun of last year, that we're the authorities are more likely to do kind of more than they need to rather than less than they need to. So we could see a kind of a bit of damage in the short term, but it's all a kind of a waiting game at this stage. And going back to our favorite kind of leading indicator of M1 growth in China, and including household deposits as well, that tells us quite clearly that that Chinese GDP growth should be accelerating through this year, up to kind of almost twice the kind of the quarter-on-quarter run rate that we're seeing at the moment by the end of this year, compared with the beginning of it. So there could be some nasty volatility at the beginning of the year, but that just means there'll be more kind of pent-up demand released at the end of the year. And taking that back to where we started on kind of prices, that probably feeds through the M1 trends, probably feed through to commodity prices, of rising levels of commodity prices this year back to around kind of 2014 levels, and
Right.
continuing to rise in next year to kind of 2011 type
Right.
of levels. So we
Freya.
can expect that to continue rising just based on those M1 trends.